Welcome back, guys. Thank you for joining me one more time. This is your boy Vusani, and this is my channel, Vusani Invests. Thank you for those who've been tuning in, and I hope these lessons are really getting to you guys and you guys are learning a lot about investments. So today it's another exciting episode. Today we discuss costs and taxes that are involved when you are investing. So stay tuned, guys. And if you're new to the channel, remember to subscribe. Hit that like button, guys. Let's make sure that that information is going through filtering in. It's very important that you understand your costs and your taxes when it comes to investing, because they will help you, or understanding both of them will help you to manage the amount of money that you pay when you are investing. So when it comes to your costs, there will be fees involved when you do invest, and if you know how to manage them, you'll be able to know which fees you can avoid and which fees you can't avoid. And when it comes to taxes do help you understand your returns better, because you will have taxes on your income as well as taxes on your capital gains. So understanding that will help you understand the full picture when it comes to your return. And the reason why we do need to understand this is because there is a compound effect, especially when it comes to your costs. There's a compound effect that do eat up your returns. So understanding and managing this is a very important step when it comes to your investments. So what are the costs involved? First, let's discuss the fees that you will pay. The first fee is your advice fee. So this is the fee that you are paying your financial advisor for all the good advice that he gives you for decisions that you're going to make with your money. From there, your financial advisor most of the time will recommend some unit trusts or some mutual funds. So all those have their own fees. So the fees that you will be faced, or the fees that you will pay when dealing with those funds, first you'll get your initial fees, you'll get your ongoing fees, you'll get your management fees, you get your performance fees, and you also are liable to some exit fees. I want to discuss all those fees. So the first fee is your initial fee. This is a fee that you pay for taking up the investment. So this is the first fee that you pay for setting up that investment. The second fee is your ongoing fee. So this is paid annually. This is to just make sure that all the stuff that need to be paid to maintain your investment is being paid. The next one you're paying is your management fee. This is for the person that manages the fund. He needs to get paid to make sure that the fund delivers on its promises. And then the other one is a performance fees. So if this manager exceeds his performance or his promises, he also charges a performance fee. Not all funds do charge performance fees, but most do. So you also have your exit fees. Those are your fees that you pay, let's say a penalty for exiting a fund before its maturity date. So those are the different types of fees that you will pay. So those were a lot of fees that I mentioned, guys. And I don't want to discourage you guys from investing. So I'm going to tell you a few things that I've done to avoid a lot of those fees. So firstly, I manage my own portfolio. So I buy my own shares, I sell my own shares. So by doing so, I've avoided a lot of fees. So how do you go about doing it? I did post a video last time around about finding yourself a suitable platform. So the platform most of the time will come with a platform fee, and if you do find a platform that does not have a platform fee, that is more suitable. I did show you guys with that example last time that I use Easy Equities. It has no platform fees. So I'm already saving there as well. And when I buy my shares and I sell them, the only fee that I'm paying is a transaction fee, which is a very low percentage. So I don't mind paying that because you really cannot avoid all the fees. So that's the ways that I've gone about doing this. So what are the different taxes that you're going to pay on your investment? There will be taxes that you pay on the income you derive from your investments, as well as any capital gains on your investments. So from the incomes, what are the income that you do get on your investments? You get dividends income, as well as any interest that you're gonna be deriving from your investments. So on your dividends part, you're going to pay taxes called dividends withholding tax. The reason they're called withholding tax is that the company that does issue those dividends most of the time or all the time withhold those taxes and pay directly to SARS before they pay you those dividends. So you won't really have to be paying those dividends. The company will already pay that on your behalf. The next one is your interest. So your interest, you treat it the same way as you treat your income. So this will be payable according to your tax bracket. So consult your SARS income tax bracket, and that will let you know how much income tax you pay on the interest. The last one is on your capital gains. So for argument's sake, if you bought shares at the value of 100,000 and you dispose of them next year and the value has gone up by another 100,000, they're now 200,000. So you'll be paying interest on that extra 100,000, and that's called a capital gains tax. So those are the costs as well as the taxes that are payable on your investments. It's good that you know of them so that you can manage those that you can, and as well as understand the return that you get post your taxes as well as the fees that you do pay. So thank you one more time for joining me.